But we do, as you know, if you're a regular viewer, always start out with the stock of the day. And today it's AGL Energy after it hiked its fiscal 2024 earnings outlook on strong summer demand, citing improved plant availability and higher consumer demand in both New South Wales and Queensland. AGL now expects underlying net profit after tax of between $760 and $810 million. So that's up from its previous guidance. Its underlying net profit in fiscal 2023 was $281 million. It's also improved its outlook for underlying operating earnings to between $2.1 billion and $2.2 billion, the midpoint of which is around 3% higher than its prior view. So again, let's just quickly check in on the stock price. Just past noon here in Sydney, and yeah, doing really well off the back of that upgrade, up by 6%, $9.91. So with my guest hosts, Shawn Hickman and Rudi Filapek-Vandyck, let's get into it, shall we? I'll start with you, Shawn, on AGL.
Okay, I didn't know what stock we had today, so...
Oh, well, surprise.
Yeah, surprise.
You missed the email.
Well, the details doesn't matter. What matters is we like AGL. We were bullish into the numbers today. We still like AGL. I think it looks good. I'd call it a buy.
That's a buy. And you know, you see further upside, obviously, in that share price. Are you sort of a short-term holder? Are you long-term holder of AGL?
No, I'd be a medium to longer-term holder. Like it as an income play, but I also think it's got some capital gain there. It's obviously had a nice little bit of capital gain today, but we are in a market where stocks that get upgrades are tending to keep strong and keep upgrading. Stocks that are missing, downgrading, are carrying on to miss. This is in the right place. It's doing the right things. We like AGL.
We like upgrades, don't we? All
we
right.
Love upgrades.
Rudi, do you like, what I like doesn't really matter, AGL?
We do like upgrades. I mean, I sometimes, on occasion, I read a lot, and I sometimes see people in finance making absolutely ridiculous forecasts and analysis, as if earnings profits wouldn't count for equity markets. And I see a few here and there. And today, of course, is one of those examples where earnings forecasts do matter, I mean, and we like upgrades, and that's why the share price is up today. I wouldn't necessarily conflict with Shawn's analysis, but I have a different take on it.
Okay, that's unsurprising. What's your different take?
Oh, really? On Monday, and I wrote about it for FNArena subscribers, on Monday, Morgan Stanley issued an extremely interesting report, trying to assess what the surging demand in data centers is going to do to Australia. And long story short, amongst the main beneficiaries cited were Origin Energy and AGL Energy. And the reason for that is that we are increasingly building more and more data centers, and the growth for the next 7 or 8 years is 150% of the current capacity we have. And these monsters, because basically that's what they are, they absolutely require so much power that you almost get so much tension on the network of whether we can cope with that. Now, Morgan Stanley thinks that the country can cope until 2030, which basically means we shouldn't worry too much about energy demand in this country. It's coming. It's coming on the back of massive investments of multi-billion dollars. And of course, we have Goodman Group and NextDC as the logical beneficiaries of that. But we also have AGL Energy and Origin Energy. So I think, on that basis, I agree with Shawn. If you can take a long-term view and forget about what happens next week, next month, or whatever, but this could well be a multi-year story where those guys, at the very least, have protection to the downside in demand form. They can only fuck it up themselves if they don't execute, but they should basically do well out of that.
I wouldn't use
Did
that
I use
exact
that word, by the way?
No. I wouldn't use that term.
I was like, I'm just going to let that.
I wasn't talk over that. I mean, I wrote about this morning about Goodman Group and NextDC. We've been very bullish. Data centers, Goodman Group has killed it for us. We could have had both. We went with Goodman Group.
Still killing it for me.
Yeah, it's looking fantastic. We see no reason to sell it. I think it'll be $40 before you know it. Might take a little bit off the table because suddenly it will become a huge part of our portfolio at $40. I looked at NextDC. They both look like they got 15% upside before you know it. They both look great. There's no point holding both. We're a real money mark portfolio like Rudi. And this might be a secondary play down the track.
Yeah. It's a mega
real.
trend. It's a mega trend. I think we can
Yes.
safely call data centers. I heard you guys or you perhaps, lamenting that we didn't have any copper to discuss today, because again, like copper is one of those tentacles coming from this data center mega trend. So I'll be cheeky and throw in a copper pick from you if you still like the thematic.
It's not as easy as it was. Osminerals Minerals was laid down as that was the quality play.
Yeah.
BHP sorted it up. We're long Samphire, we're long BHP, we're long Evolution. Evolution has been a pain in the neck because earnings do matter, but I still like gold as well. I've got a sneaky one. I think of BHP when it lifts its bid for Anglo-American. Hopefully it hasn't done so in the last hour or two, otherwise I'm off mark. And if the stock does spike down towards $40, I think you're getting great entry to that quality stock. Otherwise you have to go overseas, maybe look at ETFs, but copper locally at the moment, Sandfire's the easy play. It almost dances a perfect tango with the copper price.
I don't think you really invest in miners, do you, Rudi?
I don't, but I do have a view about it. If you go for the smaller cap, single commodity ones, then you always risk that if something happens, weather, mine, whatever, cost overrun, share price gets clobbered. You see it in the gold sector, for example. So if I would go into the theme, I would opt for either Rio or BHP, because any problems that appear there, you don't see that much in the share price, and you still get your upside.
All right. Thanks, guys. Little bonus conversation there for you.